Hello everyone, welcome to my channel, my third video for today. This is a channel that provides education and information on ways to generate income online and such. If you're interested in that topic, please consider subscribing and following my channel. In the videos themselves, make sure you look under the video for a description on information about the video and other ways to contact me and other opportunities that I share. So with that, let's move right into the content. Now, this is one called a crypto called 1 inch. I haven't done anything with this, but I'm going to kind of do this real time with you and show you how you would go about analyzing. And on the daily, you can see it's been phenomenal. It's made great moves here, and now it's kind of tapered out, which is not a bad thing because it's creating a base. When you go in a little deeper and you start scaling in here, you could kind of see where you might have had previous support over here. It's now becoming resistance, right? There was support, broke through. Now you got some resistance. You got some more resistance, and you got to kind of figure out what's going on here. So the more support you're getting, the harder it's going to be to break back through it. So what I could see pretty quickly here is an ascending wedge formation with this as the top and continuing higher highs on the low side. So you could very easily either use the triangle pattern and just kind of draw it out this way. Just kind of use that tool to your advantage instead of drawing trend lines. Or you could, go ahead and just draw a trend line to do the same thing. But might as well use the tools that you're given and not worry about struggling with trend lines. So this is a crude, estimation of what's going on here. Again, like I said, this is going to be a resistance area, but you could see price action as it's coming down. It's being bought up more and more, and it's not coming down as low as it was. So this in fact is a bullish type pattern when you get an ascending wedge like this. So what you're looking for is a breakout up in this area or a breakdown. And from there, you would take the base of this move. That didn't work too well. Oh, that wasn't a trend line. That's why. So you would go from the top to the bottom, get the approximate length of that, and then when you draw that out, that would be a possible target up here, up in the $6 range. And what you got to do is you got to look left. You got to look at other areas where there might have been some prior resistance. So you want to mark those. That's an obvious one right there. And then of course, you got the peaks of the price action. So, certainly as it approaches this peak right here, it's going to be a little bit of resistance. Now, in addition to this, what you could do is you could take a step back and you could kind of look at maybe analyzing the most recent Fibonacci retracements of maybe go up to the higher time frame and just kind of figure out where an obvious pivot might be. I mean, you might want to look from here to here and see what it looks like. And again, you could see again reactions down here in the 618 and the 65, and then again more action 5.5 and 5. So as in the past and as always, this is the area of accumulation. If you're looking to follow the trend and you're looking to take advantage of a retracement, somewhere between the 0.5 and the 0.65 is where you should be dollar cost averaging into a position. So that's the spots where you should get. I'm sorry, I was trying to think about the next topic here. So another thing you might want to look at is the negative 236 as a possible price target. And then, as I also mentioned, another price target could be the previous all-time, right? And then of course we have our pattern breakout, which is very close to where I just had. So these are like three areas of possible times of sales that you should think about getting out of some of your position. Now, it doesn't mean that doesn't mean that like between here and here it's pretty close. So chances are somewhere you could probably just get rid of these two zones, and just as you look left, you could kind of see there's a lot of wicks right here, right? So that's a lot of resistance area. So this could probably just be considered one sell area, since all this is there was a lot of resistance up in here. So somewhere in this range is a possible sell. Of course, this is, you know, another possible sell area. And then you could always, you know, hold on to some of it until it comes up in here. So, you know, you're talking about somewhere in the $6 range up here, right? Somewhere in the maybe $7.75 to $8 range here. And then when you get up in here, you're talking, you know, 14.5, 15, between 14 and 15. You know, if you want to be a little bit more conservative, go with 14. So those are just some areas on the high side. And then, of course, there's always the downside, right? I mean, you take this and you clone it and you bring it down here. You know, you could see if you're going to do the sale, if you're going to follow the breakout on the downside, you know, one of your targets could be here. You could also see that kind of aligns with some resistance and support from back here. So that could be, you know, you could see there was wicks there and then there was support here. So it kind of lines up with the target. It just depends where it's going to break out. You know, if it takes a little bit more time to break out to the downside, then, but this is certainly an area like 2.5 or so would be an area of a sell. So those are some upside and downside targets depending on which way this pattern breaks out. Again, you know, even on the higher time frame, you could kind of see, you know, a downward trend line from here, and you can see how it's been kind of following that. So you could throw that on there and kind of see, it kind of aligns where it could break out the trend line at the top of this peak here, or it could follow down further. You know, there might be a little bit more bouncing. Usually about 80% through this pattern is when it breaks out, and the probability is a little bit more on the upside. You know, we are in a uptrend, you know, bull trend. So, you know, all considerations of price action right now, I would expect a break up instead of a break down, but you never know. You got to wait for that to happen. So I just wanted to share another piece of news with you guys that came out earlier today. Where is it? I think I lost it. Oh, right here. Fox put out a little briefing here. I'll put the link in the description. But the stimulus bill was passed, and I had thought maybe it's going to take up to a week to come out. But they're actually saying that some accounts might start getting hit this weekend. So that's something for you guys to pay attention to if you're trading over the weekend, or you're getting ready, you know, you're watching the charts. Set your alarms, because as people's checks start hitting their bank, they may go to Coinbase, and a lot of times if you're already signed up to Coinbase or Gemini, they'll give you immediate trading capability even though the funds haven't cleared, like if you do an ACH. So even though the money doesn't actually get to these exchanges, people are going to be initiating a deposit into these exchanges, and they could buy the coins, especially if they're looking to hold it long term. That, you know, you could buy and sell without having the money hit the Gemini or Coinbase exchanges. So people might start, you know, seeing their accounts hit, you know, with the deposit, and they may go and want to buy some crypto. So there might be some upward momentum this weekend, or at least starting this weekend, and probably falling, you know, leading into next week. The next week or so should be pretty interesting for the crypto market. So it's just something I saw. I'll put the link here so you can listen to this whole thing. I'm not going to extend the video 2 minutes for you to listen to it. But if you're interested in hearing what they're saying here, you can go to their post and watch their link directly. I'll put it in the description. All right, so guys, that's it for now. Actually, no, I want to do one more thing real quick. I'm just going to summarize some of the other cryptos that we've been looking at here. Nothing really is happening to most of these. What did I just do? Did it again. Keep hitting the wrong thing. All right, so Cardano. Cardano is still kind of floundering in this pattern here. You just got to continually come in here, and it looks like it, depending on how you draw this, the higher time frames kind of clean it up. And even actually, I wanted to show you on the other time frame, in the other chart, but even if you wanted to clean it up more, just to kind of get an idea of what's going on, if you put the line chart on, a lot of times you get some clearer vision of what's going on. Then you can go back and forth between the two. You're not really seeing it here. Let's go back to the 1 inch. If you change this to line, you could kind of get a on a higher time frame it doesn't work so well. You got to go lower time frame when you're doing this, but you can kind of see the touches a little bit better, and you can kind of align your drawing to better align with the touching. If you're trying to do a trend line and such, sometimes that helps you get the actual essence of what you're trying to draw here, and then you can go back to the candles. So just something I noticed on I think it was actually V-Chain that I saw that it really helped to clean up a little bit. But it's something you can do if you want to kind of get a better feel for where the peaks are, and if you're not drawing the lines on the wicks, the line drawing doesn't show you the wicks, so you notice the wicks go away. So if you're looking at candle bodies and you want to focus on drawing lines to candle bodies, you can go back and forth in the line tool, and it'll really kind of help you out, and in support and resistance as well. You could start really seeing where things are bouncing in, support and resistance levels. So it's just something I recently came across by accident, but I wanted to throw it out there as something that you can use as a tool. So again, nothing really going on with Cardano right now. It's been kind of quiet, just within this pattern. No big volume, so nothing really to say about that. Now Bitcoin, on the other hand, has broken out. It's still continuing to follow this channel. I want to show you something interesting. So I mentioned earlier on this pitchfork, if you start seeing price action come out of one of these upper or lower bands, you can add another like 1.25. You see how when you add that, how price action still, like, it gets extended outside, but it'll still follow that channel. So that's something you can do. You can add an extra line on the outside, and you could see how price action might still be in the channel overall, but extending it a little bit. So now you can see we're hitting the next resistance area. So that's again, that's to the all-time high here, and if we break through that, then many people are talking 68,000. We've developed this possible range here between 65 and 68. It's a pretty big range, but again, you don't want to sell when everyone else is selling. You want to sell when everyone isn't. So you might want to get out a little earlier than what everyone's talking about, just to lock in some profits. Maybe you've hit this already, so maybe you're going to scale out of your trade a little bit, and then you're going to have some more up here. And then, like I said before, you want to continuously increasing your stop losses. So like over here, you'd put the stop loss there. Once you break through there, if you see a check kind of like come like this and then go up, then you can move your stop loss up here. And all along the way, you're locking in, you're becoming a break even at least, and or in profit. So you're never going to lose money. So consider that in terms of risk management. And that's all I really got to say about Bitcoin. Ethereum, still staying within the triangle that we drew here. Oop. Yeah, it's still staying within the pitchfork, and in addition, it's also staying in the larger time frame triangle pattern. We're still waiting for it to break up or break down. That's really all I gotta say about that. Other than you just got to be watching that it's kind of following in the footsteps of Bitcoin. So as Bitcoin starts spiking up, you should be able to see this spike up. And again, just like in the past, you can see right here, you can see this target. This is a possible, if you get in on a trade, you might want to consider scaling out slightly here. You know, this is the all-time high, so it's going to be a little tough to get past that. And then once it gets past that, you know, there is that bigger target of 2,500 that everyone's talking about. And that's, you know, 100% move on this fib level. And then you got the, you know, the next range up here between these two. You know, somewhere between 27 and 28, so maybe like 27.5 if we want to cut the difference. So those are some upside levels. Once this breaks out, you might want to consider your entry and then your exits. You know, this is not too much of a move, but still, you know, you got to realize it's got to breach past the all-time high, so it's going to be, there's going to be some resistance there. So there's nothing wrong with cutting in, like I said in the past, and I'll say it again, you know, when you break out here, you know, you're going to put your stop loss somewhere below this trend line, because you expect price to you know, once it comes out, it's going to check and it's going to stay above it. So you want to put your stop loss somewhere here, and then as it goes up here and it goes through and checks this and then goes back up again, then you want to move your stop loss up here. And then same thing up here. When it goes through, checks and goes up, again, you want to move your stop loss here. And same thing here. I mean, at this point, you're probably scaled out of your position, or you're really keeping it for long term. So once it goes through here, you could move your stop loss over here. So that's just kind of like an idea of how you can lock in your break-even point, you know, lock out of some profits for sure, and then move your stop loss so that in case price action turns around some reason, you're guaranteed some more profits between here and here. You know, if you got in down there and you're selling up here, so you got that much profits. On this situation, if you got in down here, you're locking in that much profit. Things turn south, and then again, finally up here, you know, if things turn south, you're locking in that much profit. So that's what this is all about. This is all about, you know, managing your risk, locking in profits, and living to trade another day. And with the profits you make from this, either you bring it into USD Tether, or you bring it into Bitcoin, or you bring it into another coin, and then you utilize that money to make more money in something else. Next one. Link we talked about earlier today, so I'm not going to talk about that again. And then again, ADA. All right, so that's it. That's the summary that I wanted to give you. It's a wrap for the day. That's where we are. These are some ideas to consider. Again, this is an educational channel. This is not signals. This is for you to practice on the charts, draw it out, come up with a trading plan, come up with your risk management plan, come up with strategies to get in and get out. You know, find reasons to not trade rather than trade. Find out, like, when you can't find a reason not to put a trade in, then that's a good trade. Otherwise, there's nothing wrong with not trading and keeping the money on the side. You're protecting your equity, you're protecting your trading account, and you want to maximize your profits and minimize your losses. So everything I'm talking about here is more than just signals. I'm not pushing this out to the internet. I'm not putting it on Twitter to just have someone come in and say, okay, I'm going to buy now. That's not the purpose of this channel. So if that's why you're here, then you're here for the wrong reasons. So again, I appreciate your comments, but again, this is more than just a signals. This is not a signals platform. I am never saying that this is signals. I'm not trying to sell signals. I'm trying to show you how to do technical analysis. I'm trying to explain to you the mindset that you should get in. And if you know all that already, then go find someone else that's more experienced than me to follow, or just create your own channel, you know, if you know better. But again, I appreciate the comments, but again, I just want to stress to the point that there's more to this channel than just entries and exit points. So hope you guys take that with the positivity that I really mean here. I'm trying to share and educate you guys, not just it's not a hit and run site. All right, so take care. If you like that and you want to follow me, that's fine. I'm not looking for quantity. I'm looking for quality subscriber base. So please consider subscribing and liking my channel and sharing my channel and following me if you're going to be ready to learn the skill set and do what you need to do to be able to create the financial freedom for yourself and do things that no one else can take away from you. Once you learn this skill set, it's a skill set that you'll have for life. So take the time and actually educate yourself rather than just looking for quick money. Take care, guys.